21st. February 22nd is the last day.
There's going to be 2 days before then that I will be gone.
We certainly look forward to that.
I have the 12th, because I have a dentist appointment. The 29th, because I have ortho.
Dentist and ortho?
Yep. But they're on different days.
You're going to have great teeth.
I know.
Great teeth, I'm telling you.
My dentist already told me I have
A few $1,000 will do to you, huh? Okay, 15 takes the information that we just completed in 14, and now we're going to use that information to make end of the year financial statements. So this isn't overly difficult, but it is it's a matter of getting everything where it needs to go correctly. And I'll tell you right now, this is an open book test. Again. But also know that just because it's an open book test doesn't mean that if you don't know what you're doing, that it's going to go smoothly.
So is it going to be as hard as the last one? 'Cause that one was, well,
it's different. It's different. I don't think it's quite as hard, but it could be, I guess. So the first document that we're going to make is an income statement. And what they give you is they give you a finished worksheet like we just did, 397 and 398. And this is where you're going to get all of the information used to make your income statement. Now, I know you guys don't know this already, but if you think about this logically, what two columns of the worksheet do you suppose you would use to make the income statement? Balance sheet. I would just use the income statement.
I thought you said 2.
Well, debt credit.
Oh.
So, the first thing we're going to use, first thing we're going to do is we're going to title this. And it tells us in 15.1 that the company that we are working for is Interstate Tires.
I thought they were batteries.
I did too, but I think they're expanding. Interstate Tires, and this is an income statement. And this is for a year ended. We were worried about you, Chris.
Did you oversleep?
No. He was late getting his hair cut.
The haircut this morning? I thought you stayed up late watching the Heat win last night.
Oh, it was too late for me to stay up. I was tired by then. They did work on that.
They did. They play the Lakers tonight?
Tonight. Not a late game.
Oh, it's an 8:30 start.
9:30.
Is it 9:30?
Yeah.
Nice.
I was gonna watch it.
Alright, Chris needs a packet.
You were looking for it, Chris. Thanks. Yeah, I woke up this morning and I was like, oh, chapter 15 starts today.
Okay.
Big one too.
So the first section, we're going to put it into sections, is a revenue section. And in the revenue, what accounts do we associate with revenue? Revenue means money coming in, so sales. Okay? So the first account I'm going to put in is sales. And there's not, the rule of thumb is you got a lot of columns here. And the closer to the finished numbers go in the right hand column, and everything kind of works towards it. And what I'm going to have you do is, if you flip back one page on 452 in your book, it'll kind of give you a guideline of where things go. And that's why, this is why we're going to use open books, so you have something like this to look at so that you can put it together correctly. Okay? So our sales is how much? $548,989.25. And if I flip back, it tells me that that sales amount goes in the third column. So it's 548,989.25. Just like copy and pasting. Now, there are two accounts that are contra accounts of sales, and contra accounts means sales that accounts that adversely affect sales. And those are what?
Discount and VAT and allowance.
Yep, sales discount and sales returns and allowances. So I need to subtract those from sales to find, I'm turning the wrong way there, ain't I? I need to subtract those from sales. So I'm going to go less sales discount and the amount of sales discount is how much? I see 661.69. That is going to go in the column to the left of it, 661.69. And then you're also going to have it less sales returns and allowances. Sales returns and allowances has a balance of $3,512.84. So now what I'm going to do is I'm going to add those two together, my sales discount and my sales returns and allowances, and that number is just going to slide over to the right one spot. What do you get, Erica?
$4,174.52.
Say it again.
$4,174.53.
Okay. So now I'm going to take my total sales and I'm going to subtract my discount and allowance, and I'm going to have my gross sales minus my other stuff. It's going to give me net sales. And my net sales is my final amount. So I'm going to take 548,989.25 minus 4174.53, and that number is going to go in the right-hand column, far right. That number is you got a number for me, Erica?
544,814.72.
544 what?
814
This one in here.
72. Okay.
Yeah. Spend some time at home looking for it.
No, I figured she brought it in. I knew I left it there. I just spent some time with Mr. Stewart.
Fair enough. I'll come talk to you about that time. Okay, this last column tells us that we want to find anything in the right-hand column, we want to find how that relates as a percentage of net sales. So net sales is 544, so everything is divided by net sales. So if I take 544, 814 divided by 544, 814, 72, I get what?
100%.
1. And when you put 1 as a percent, it is 100. Now, my next category is cost of merchandise sold. And cost of merchandise sold basically means how much money do we have in the products that we are selling. So what did we buy it for? And that gives us an idea of then how much money we're going to make at the end of it. So I'm going to take my merchandise inventory, on January 1. It says January, sorry. And that amount you get from your merchandise inventory in the trial balance. So Erica, you were kind of right.
Me?
Yep. Trial balance, merchandise inventory. 198, 480, 33. That amount goes in the third column. 198, 480, 33. When we buy more goods to sell, what account do we use? Purchases. So this is what we had for sale. Purchases, we're adding more. So what is our balance of purchases? Purchases, income statement tells us it is 278, 452, 39. So that's going to go with the line before. 278, 452, 39. Purchases is just like sales. We have two accounts that affect it negatively. And they are what? Purchases discount. Purchases returns and allowances. Purchases discount tells us it is 1,845.78. 1,845.78. And then you've got purchases, returns, and allowances. Purchases, returns, and allowances is 35.48.65. You're going to do the exact same thing with these two. I'm going to add those two together. I can't figure out how to project it. Sandy was in here, she had stuff plugged in, and I don't know what happened. That's my cord here.
So that's going on. See,
Erica, you got a number for me there?
Yeah, 5,394.43.
43? 5394.43. Okay. So now
Take that minus this.
you take 278, 452.39 minus that, and you're going to get what? We had net sales before, so what do you suppose we have now?
Net purchase.
Net purchases. So our net purchases goes here in the third column, and that is what?
$273,057.96.
273,057. What? 96. So this is what we had available for sale on January 1, the 198. We acquired this much throughout the year. So we're going to add those together, and that is going to give us the total cost.
Which ones are we adding?
The 198 and 273 of merchandise available for sale. Yeah, right, small there. Total cost of merchandise available for sale. Did it work?
No, I'll wait till you're done. Just call me when you're done. Come on.
All right.
I'll mess with it. Show me what you're saying.
Just say call me maybe. So we add those two together and we get a large number. The large number is what? Draker, you got something for me? We already talked about that, Chris. You behind?
did?
Yes. Erica, do you got a number for me?
Yeah, 471.
471,
538.
538,
29.
29.
He's like,
Yes.
well, I don't know why people weird how there's a relationship.
Okay. Now we're going to take less our merchandise inventory on December 31st. Our merchandise inventory on December 31st is, so this is January 1st. This is December 31st. 188, 999, 25. So that goes right under it. 188, 999, 25. Merchandise inventory January 1. Merchandise inventory December 31. And we are going to subtract those. And that is going to give us cost of merchandise sold. So 471, 538.29 minus 188, 999.25 is going to come over here.
We're subtracting them.
Mm-hmm.
$282,539.04.
282, 539, 04. Okay, now, when you look at these two numbers, what do they represent? This number is our total sales. This number is the total amount of money spent on the product that we sold. So, I have total sales, I subtract the amount of money that we spent on the product, and that's going to give us a gross profit on sales. So 544, 814, 72 minus 282, 539, 04. Going to give us this. $262. Say it again.
275.
275.
68
68.
cents.
What does gross profit mean? What's the difference between gross and net?
Net is what you made, including the
Yep.
what you produced.
Gross is before taxes. Net is after. So, just like when you get a paycheck, your gross pay, if you make $10 an hour, your gross pay is $10 an hour. Your net pay is whatever it is after you pay your taxes. Whatever it is. Yep. So, we got one thing left, and then we'll end for the day. Every number here on the right has to be divided by 544, 814, 72. So I'm going to take these numbers, 282, 539, 04, divided by 544, 814, 72. And it's going to be, well, it's got to be close to 50%. 52%?
Yep.
And you're going to do the same for this one, which had better be 48.
Well,
48. Okay. So I'll stop now and we'll finish this tomorrow. But while it's fresh,
it's not far back.
you should do the on your own.
Will do.